Hey everyone, welcome to my channel. Today we going to look at lessee lease accounting under IFRS 16. We going to go through the standard, identify the key areas that you need to understand, and then we will look at a practical example of how to account for this under IFRS 16. So without further ado, let's get into it. Well, in the past, under IAS 17, if a company was leasing assets, they would capitalize those assets and depreciate them over the useful life. However, there were exemptions where you didn't have to capitalize the asset. For example, if the lease term was shorter than the company's reporting period, so say 3 years, and your reporting period is 5 years, well, then you didn't have to capitalize the asset. You could expense the payments over that period. Also, if the value of the asset being leased was low, again, you didn't have to capitalize the asset. In practice, this meant that some companies were applying IFRS 16 differently, and that's what the new standard aims to fix. What does IFRS 16 say then? Well, the new standard says that almost all leases should be recognized on the balance sheet. There are a few exceptions though, which we will cover in another video, but for now, just know that most leases should be recognized on the balance sheet. Okay, so what does IFRS 16 define as a lease? Well, a lease is defined as a contract that conveys the right to use an asset for a period of time in exchange for consideration. So basically, if you're repaying to use an asset for a period of time, then you're re-entering into a lease. Okay, so when do we recognize a lease? Well, we recognize a lease when the contract starts, so we recognize it when we get control of the asset. If you're looking for indicators that control has been transferred well, look for things like the customer can use the asset, the customer has the ability to direct the use of the asset, and the customer enjoys substantially all of the risks and rewards of ownership. Okay, so what happens after we recognize the lease? Well, once we've recognized the lease, we need to allocate the lease liability and the right-of-use asset over the lease term. Now the lease liability is simply the present value of the future lease payments discounted at the interest rate that reflects the time value of money. Now I'm not going to go into detail about how to calculate the present value here, but if you'd like me to make a video on that, please comment below. Okay, so the right-of-use asset, what is that? Well, this is the asset that the company has from the lease. It's the asset that they have rights to use for the period of time specified in the contract. That right-of-use asset is depreciated over the shorter of either the asset's useful life or the lease term. Okay, so let's have a look at an example. So, in this example, ABC Limited leases equipment from XYZ Co. on January 2022. The equipment has a fair value of $40,000. The lease term is 3 years. The lease payments are due at the end of each year, and the interest rate for the lease is 8%. So what we have to do here is journalize the transaction. So I'll show you the debits and credits first and then explain them. So the debit to right-of-use asset, this is $40,000. The debit to lease liability, this is $40,000, and then the credit to cash. Now, why do we have these debits? Well, we have a debit to the right-of-use asset because we've obtained an asset. We have a debit to the lease liability because we have a liability. We owe money back to the lessor. And then we have a credit to cash because we paid for this asset up front. Now the next step is to amortize the right-of-use asset. So we need to depreciate it over the 3 years of the lease term. So that will be $13,333 per year. So what we have to do is make a journal entry for that. So the debit here is depreciation expense and the credit is right-of-use asset. The next thing that we need to do is make the annual lease payment, so we have to pay back the lease liability. So the debit here is lease liability and the credit is cash. Now notice that the lease liability decreases each year because we're making payments towards it. Now the last thing that we need to do is to recognize the interest expense. So the lease liability has an interest rate of 8%. So the interest expense here will be $3,200. So we have to make a journal entry for that. So the debit is interest expense and the credit is lease liability. Okay, so let's prepare the post-closing trial balance to see what's on the balance sheet. So at the beginning we had a right-of-use asset of $40,000. We then depreciated it by $13,333, leaving us with $26,667. Then we need to look at the lease liability. At the beginning, we had a lease liability of $40,000. We made lease payments of $33,333 towards it, leaving us with $6,667. Then we have interest expense. Interest expense was recognized at $3,200, bringing the lease liability down to $3,200. So this is effectively how it works. Now that you know the basic principles behind lease accounting, I want you to try this question. This is a pretty straightforward question, so if you want to pause the video and give it a try, you can do that. Okay, so how did you go? Well, if you got that right, well done. If you got it wrong, don't worry. I'm going to walk you through the solution now. Okay, So ABC Ltd leases plant machinery from XYZ Limited on January 2022. The fair value of the plant machinery is $80,000. The lease term is 4 years and the lease payments are due at the end of each year. The interest rate implicit in the lease is 8%. Required, prepare the necessary journal entries for this transaction. Okay, so I'm going to solve this question. Now if you worked through this question yourself, pause the video and see how your solution matches mine. Okay, so the first thing that we have to do is journalize this transaction. So we have a debit to right-of-use asset. This is $80,000. We have a debit to lease liability. Also $80,000, and then we have a credit to cash of $80,000. The next thing that we have to do is recognize the interest expense on the lease liability. So the lease liability has an interest rate of 8%. So the interest expense here will be $6,400. So we have to make a journal entry for that. So the debit is interest expense and the credit is lease liability. The next thing that we have to do is recognize the depreciation expense on the right-of-use asset. So the right-of-use asset needs to be depreciated over the 4 years of the lease term, so that will be $20,000 per year. So we have to make a journal entry for that. So the debit here is depreciation expense and the credit is right-of-use asset. The last thing that we have to do is to make the annual lease payment. So we have to pay back the lease liability. So the debit here is lease liability and the credit is cash. Now notice that the lease liability decreases each year because we're making payments towards it.